Okay, ladies and gentlemen, welcome back after our long summer break to the Risk and Regulation news channel of PwC. And like always, after such a long break, we are fresh, we are motivated, and of course, we are going to do a new video series for you. And the title of this video series is Securitisation Unlocked. And like always, I'm not doing this alone. Today I have with me Christoph Himmelmann, director here in the Frankfurt office and the co-lead of the Securitisation Workstream in the EBA SSM Office of PwC. Hi Christoph, how are you?
Good morning, Martin. Thanks for inviting me.
Yeah, it's a pleasure. It's a pleasure. Christoph, one thing. It came to my attention that in the last 6 months, all the banks were extremely busy with the implementation of the CRR3. And of course, in the end of the implementation, when the first results were shown, we were realizing together with our clients that there's a quite significant increase in RWA. And in this context, very often the topic of securitization was mentioned as an instrument for mitigating this increase in RWA. And also, I must admit, there are a lot of projects now launched by our clients where the banks want to prepare to go back to the securitization market, especially the SRT securitization market. You, our co-workstream lead on securitization in the EBA SSM office, have you observed similar rumors, projects?
Definitely, I can confirm this observation, and not only here in Germany, but also in Western and Central Eastern Europe. We see a couple of securitization projects, both from established market players, so they are relaunching their programs, but also the newbies in the market, so they try to test the water a bit and do some feasibility studies around securitization, and that's why also we think it makes a lot of sense to have such a series here and to demystify a bit the term of securitization.
Yeah. So, Christoph, you as an expert on securitization, what is on our agenda for the next weeks in this new video series on Securitization Unlocked?
Yeah, so what we've considered to be very interesting is probably as a starter for today, why securitization is back on the agenda. Why is everyone talking about it? I think this should be our starting point. Then we thought about, let's have a detailed view on the securitization reforms. During the summer break, there was a publication by the EU Commission on different reforms. This is what we will be looking at in the second chapter. This will be followed by a quite interesting discussion that we have with a couple of clients. You mentioned already CRR3 with huge impacts on capital, but also the SRT, so the securitization has an impact, and this is what we will elaborate a bit in the third chapter. In the fourth chapter, we will discuss the question how to get SRT ready. So what a new player in the market will need to do to get up to speed and to identify requirements and to have the first SRT pilot transaction ready. And probably not last, we will have a look at a very recent topic. So NPEs are rising. This is what we observed also in the stress test, for example. And here there might be real action necessary now, and this is where we want to discuss about in connection with securitization, but also with other like NPE management instruments that can play a role. So that's it for the moment, but probably we will have a couple of other sessions once we go deeper into the topics.
There's a lot of development in the market right now. That sounds all extremely interesting. It will be a super new video series, but first things first, why is securitization currently on top of the agenda of all banking clients, and why everybody is talking about it?
Yeah, that's a good question, and what we see at the moment is definitely a very strong momentum for securitizations for very different reasons. Let me pick out 3 major developments that we observe. So first of all, there is definitely a political will to promote securitizations in the in the connection with the Savings and Investment Union here in Europe. So there are huge exercises in front of us, and we need some funding, and securitizations can bridge between banks, so the credits and loan market to the capital markets, and securitization can definitely play a role. That's why many policymakers are here and try to push the securitization instrument in this regard. This is one reason. The other one is what we've observed. I already mentioned it. There's the CR3 established and entered into force beginning of January. We saw many banks have like decent increases in capital. Some banks even decreasing capital requirements in the first place. But in the long run, there will be a huge increase for some banks, especially the IRB banks, when the output floor is becoming effective over the years. And that's why banks think about capital management measures, and securitization is, of course, one very important item in this discussion. We already discussed about the NPE at the horizon. So the NPE market is developing, and securitization can play a role. That's what we will discuss in one of our sessions as well. And of course, there is an anticipated change in the regulatory framework that might make things a bit easier for originators and investors on both sides of the coin, because originators probably have less capital requirements, less transparency requirements, and investors have a bit easier due diligence requirements to solve. And that's definitely a push probably in the securitization market. So strong momentum. Everyone was waiting for these reforms at the EU level, and now it's at least the draft is on the table, and we will need to see what this will bring for the securitization market.
Yeah, I think we can also add, like, if we look to the number of securitization projects that are currently conducted by PwC together with our clients, and use that as a key performance indicator, we would say, okay, we are expecting a huge increase in the securitization market in the next 2 years.
Which is probably similar to the graph that we see here on this slide. So the volumes of securitization issuance is somehow proportional to our project activities.
Yeah, definitely. Christoph, I understand securitization is a very, very important instrument for capital management, and especially for managing the RWA increase coming from the CR3. But securitization is not the only answer. We need a special kind of securitization to reduce RWA, and that is an SRT. Can you give us some insight? What is an SRT? What does SRT stand for? And what is the challenge for the banks?
So securitization can have many advantages, but if you want to manage your capital with securitization, you need to have an SRT, so a significant risk transfer. This is the definition coming also from the regulations for banks to fulfill, for originators to fulfill, if they want to, let's say, reduce their RWA, reduce their CET1 requirements for the respective securitized portfolio. So what is special for SRT? SRT can be achieved with both traditional and synthetic securitization. That's no issue. When you have the SRT, there's an approval process with the regulator and supervisory authorities in place. But if you have the SRT, you can ignore the RWA coming from the underlying portfolio, and instead you need to consider the RWA coming from the tranches. And there's for traditional SRT transactions, you retain some tranches, and you retain and you need to consider the RWA from the retained tranches. For synthetic SRT, you more or less apply credit risk mitigations for those tranches that are protected or issued to the market. So this is more or less the mechanics. And given the material RWA impact, there's definitely a huge governance process around it necessary. I discussed already the topic of approval processes. So the SRT is nothing that you can do alone as a bank, but you need to involve your supervisor. And a very important point here is that you need to be able to prove that a minimum of 50% of your unexpected losses were transferred to a third party. So this is the so-called quantitative test of for an SRT. There are other qualitative requirements to fulfill as well, so that there are no impediments in the contracts for transferring those unexpected losses. But once you've done it, you get the approval, or it's a non-objection from the supervisory authorities, and then you can start ignoring the RWA and have a significant RWA relief normally for your portfolio.
Yeah, I even have heard that also the ECB is preparing for an increase in the securitization market, because they want to become faster in their approval processes, and they developed something that is called the SRT fast track, so that the approval for the banks for the SRT comes much faster. So what I understood now, Christoph, is that all eyes are on synthetic SRT transactions, because they're a little bit easier to achieve. Can you give us a more or less realistic example on how these SRTs, synthetic SRTs, really work, and how you can achieve the RWA relief?
Yeah, can do so. But maybe first of all, there's evidence that all eyes are on synthetic SRTs. So there was a publication from European authorities that showed the development in the SRT market. It's always a bit difficult to rely on numbers, because many SRT transactions are private, so there are no public data available. So this is what we've observed, and here's definitely evidence that synthetic securitization are on a rise, especially when it comes to SRT transactions. And in this space, we mostly talk about private transactions, so bilateral transactions between a bank and one or two investors that conclude the deal. But coming back to your question, just to provide a very simple example. So what I've brought here is, let's assume we have a portfolio of assets, of somehow homogeneous assets of 1 billion. Out of this, we select a securitized portfolio of 600 million. We have an IRB bank here, and we have an average risk weight in the IRB portfolio of 53%. So before securitization, on the left-hand side of the slide, we have a RWA of around 318 million. With capital requirements here, I assume a capital ratio, minimum capital ratio of 13%. We have around 40 capital requirements before securitization. Then we think about tranching and structuring securitization. And here is an example of a more realistic tranching structure. So we have a 6% mezzanine tranche. This is more or less reflecting then the unexpected loss of the portfolio. We have a 1% junior tranche, more or less reflecting the expected loss. And the rest is the high volume senior tranche of around 550 million. And the senior and junior tranche will be retained by the originator, and only the mezzanine tranche will be protected, probably with a financial guarantee, or will be issued with a credit-linked note to the market. So with that, we assume we achieve the SRT. So the minimum requirements that I presented before, 50% minimum unexpected losses are transferred to a third party. This is achieved, so SRT is checked. And then after securitization, we have the following picture on the right-hand side of the slide. We ignore the securitized RWA portfolio of 318. Instead, we look at the tranches. So now we have 3 tranches. The junior tranche is normally CET1 deduction right away. Here I assume we have 1250% RWA, which is more or less similar. The senior tranche is retained as well. We assume here for an STS transaction, we achieve the minimum risk weight of 10% for the senior tranche, so very high volume but very low risk weights for the senior tranche. And for the mezzanine tranche, and this is the crucial part of it, we have EAD of 36 million but 0 RWA because of the protection. So we assume we have a financial guarantee or a cash issuance here, and there's in the end, after credit risk mitigation, there's 0 RWA coming from the mezzanine tranche. And then bottom line, we have total RWA after securitization of 130 million, which is far less than the RWA before securitization. Here in this example, we have 60% RWA and CET1 relief coming out of this transaction.
Wow, 60%, that's huge, definitely. And that brings me to my next question. Why isn't it already every bank thinking about using this instrument?
Yeah.
I mean, 60% is absolutely impressive.
Exactly, and it sounds quite easy, right? If I show it here on one slide, there is of course no free lunch, and therefore we need to also discuss the cost of a transaction. First of all, there is a protection cost, so you need to pay the investor for providing the guarantees or for investing in this transaction. Here we just, for the sake of simplification, we assume a protection cost of 10%, so the coupon 10% per year on the volume of 36 million. We have 3.6 million per year on protection costs. If we now bring this together with the RWA relief or CET1 relief that we achieved, we can already think about having something like cost of capital here in terms of, in this example, of around 15%. So the cost of CET1 relief per year is around 15%. With that, you can somehow compare it with other capital injections or capital measures that you are thinking of. But of course, especially for the first time issuers, the cost of protection is not the only part of the cost side. You also need to think about the one-off transaction costs, so for legal advisors, for investment banks, for structure arranger, but also for setting up the securitization environment, so the whole infrastructure in your bank for complying with regulatory requirements, for reporting, for accounting, and so on and so forth. So there is a lot to do. It's quite complex for good reasons. It's highly regulated, but it is feasible. You need to take it into account when considering the costs. So probably a one-off transaction is not the best idea. You need to have some effects over the long run with like 1 or 2 transactions per year. At some point it will make the costs, but one-off is probably a bit higher.
Okay. Yeah, thank you very much. That was a really great overview about this very exciting topic of securitization, especially with a focus on SRT. And all these points that you mentioned, if I can summarize it, securitization are back in the game, definitely, but different than in the financial crisis. Much simpler and much more straightforward. Also, the regulatory environment changed significantly. And due to the CRR, the increase in RWA, it will be a very, very important instrument for RWA management, for sure. And very important, banks have to be prepared for it. It's not something that you do from one day to another. There are a lot of additional activities around the structuring of an SRT transaction. And of course, it should be not a one-off transaction. The costs reduce significantly over time because there is a kind of training effect. So all these points are reasons to make a more detailed view on all these different topics, and that's what we are going to do in the next videos. So, ladies and gentlemen, that's it. That was the first video in this series on Securitization Unlocked. I hope you join us also for the other videos, and Christoph, I hope you join me as well.
I will do so. Thank you, Martin.
Thank you very much. Bye-bye.